Hey Roni, how are you?
Hey,
I
Jess.
wanted, it's fun to talk to you. I wanted to ask about to decide that in 2024 it's their year to
Right.
buy a home. What do they need to look at as far as credit score?
Well, going into 2024, all I can say is there's a lot of opportunity, not just for, repeat home buyers, but specifically for first-time home buyers. With interest rates bouncing back, credit scores, of course, is one of the biggest, indicators of, qualifying for traditional mortgage. A lot of ways that we're able to, if it's what I like to tell my team and my borrowers, it's not a no, it's just a not right now, right? There's
I love
always
that.
ways, yeah, there's always ways, whether it is a quick turn within a week, a month, 6 months, to a year, there's always, always a path that we really work hard to drive our borrowers into realizing that we can make home ownership a possibility for them.
That's perfect. I love that. It's like it's not a no, it's just a maybe not right now, but we'll
Exactly.
work with you to
Yep.
make it happen. What minimum credit score would I want to see to be able to realize home ownership right away?
Right. Well, and again, there's so many other opportunities that most traditional lenders, other mortgage companies really don't, inform, the masses of that, the extended opportunities. For instance, different types of loan programs and those minimum requirements. Ideally, we're, kind of a rule of thumb for traditional conventional financing. We want that score to be at 620 or above.
Okay.
Now, we do have our government-backed type loans, so your FHA, USDA, and VA, that we can actually potentially go as low as 550. So,
Okay.
and then again, in some cases, we do offer, we have channels to offer, those who don't have traditional credit scores, foreign credit scores, or just no score at all. So
Okay.
yeah,
Yeah, if they
exactly.
haven't ever established credit, that's a
Yep,
tricky one to work
exactly.
with.
Yeah,
Okay.
but again, it's just there are those possibilities that people really aren't aware of, and us as these mortgage wholesale lenders, we really do our best at informing first time home buyers and even repeat borrowers that again those possibilities are out there.
Okay. Let's say we're at 550 or just under 550 and we want to improve our credit score
Mhm.
within the next week. What's one thing we could do in a week to improve our credit score?
Right, exactly. And kind of just to touch on what you were mentioning about even your own, your own credit, what you automatically knew because of that credit utilization, right? Some of
Yeah.
those balances are now higher. So in a very short, time, we'll say a week to a month, paying down those credit cards, that revolving debt, right? Specifically. And kind of a, rule of thumb is we want to try to keep those balances at or below 30% utilization. And
Okay.
immediately within that week, you pay down and never pay off a credit card, but pay down that balance and you'll see your score bump up within that next week or two.
And okay, like what's one third thing if I have a little longer over the next bit of time that I could be working towards to make sure that I'm ready for
Well,
a
obviously,
good credit score?
yeah, obviously payment history, not missing a payment, right? And again, just kind of touching on the revolving debt. If you miss just one payment on a credit card, it could ding you up to 180 points. So yeah, it's substantial. So really, if you kind of have that longer span of time that you're basically maintaining, right? Now
Yeah.
trying to maintain and not missing any payments on any of those liabilities is crucial for sure.
What about if I have longer, like I think I might not be home shopping till next January, February, March, like into 2024?
Uh-huh.
What can I do to improve besides paying down that revolving debt?
Sure. It's kind of a case by case, right? And that's why
Okay.
we always encourage our borrowers to it's never too early, never too late to get with a mortgage lender, get that pre-approval in place because these are the types of things that we're going to be able to provide them guidance on. So again, it's a
Yeah.
case by case scenario. So we'll just say, first time home buyer, early 20s, they're just establishing their credit. Maybe they don't have enough trade lines, so maybe they don't have enough of those credit limits open. So
Okay.
in that kind of a longer span, then I would suggest, going and getting a low balance credit improvement credit card. So now you have multiple trade lines, because that does also help improve in a pretty short.
Trade lines are just meaning lines of credit.
Correct. Lines of credit, which includes, auto loans, installment loans, or that revolving debt. Yeah. Yeah. Even student loans. Yeah, absolutely.
Another thing that I kept thinking about is how many people make really big purchases this time of year, especially before they're working towards the biggest purchase that you should make, which is homeownership.
Right. Yep. Exactly.
So it's like before you go out and buy, like, I don't know, all new furniture for your apartment,
right.
Or
yep.
the $1,000 flat screen TV that you're gonna have payments on, or a car. Like,
yep.
maybe try to think a little more long term. Like, do I want to be in, like, still paying rent a year from now, or could I be putting this 1,000, 2,000? I mean, in our area, people are paying 2,500 a month in rent, which is the same as a mortgage payment. And it's kind of that idea of, hopefully you can get to a place where you want the big goal to be homeownership, and not letting those other exciting purchases get in the way.
Yes, exactly. No, that's a very, very, very important, valid point that you made there. So of course, don't go and buy a new vehicle. If you know that at any time that, one of your lifetime goals in short notice is going to be homeownership, definitely, focus on not building too much debt. Don't go and, apply for multiple credit cards. Don't go apply for another, car loan. Because again, those multiple types of inquiries, those can ding your credit. And again, another thing that you brought up, which is another good point, is, if our consumers are currently renting, there is a possibility that you're able to report utility bills to your credit now. And so again, trying to kind of tying back to how I mentioned, the trade lines and number of credits open, now you can actually report that through even, say, Credit Karma. On time
automatic payments for things that you use every day.
Exactly. And budgeting, of course, rent, during rent, like you said, with TVs, buying a flat screen TV, furniture, that sort of thing. We definitely try to tell, especially our first time home buyers, don't get too excited. Don't go buy your furniture just yet. Don't go buy your TV just yet. Wait till, we get to the closing table and that sort of thing. And again, just to ensure that their credit still is established. They're not, building up too much revolving debt. And just really thinking budgeting. TV, say Hulu, YouTube TV, any of the, the TV apps, that you're paying on a monthly subscription, maybe, $40 a month. Yeah. Over a 12-month span, that adds up. Yeah. So
that's a good point.
Absolutely.
Well, that's awesome. I hope that people that have been thinking about homeownership will make it a true goal and think about some of these things, because whether it's raising your credit score or saving up for a solid down payment, those things take consistency, just like making your payments on time,
right? And
really paying attention, making that the priority instead of other purchases. But I do believe it's worth it
for sure.
Financially.
It is. So. It is. It really is, because of course, again, looking at the rate of return, do you rent, for the next 2-3 years, or, if you're in your early mid-20s, right now truly is an amazing time to buy. We're the millennials, the Gen Zs, they're really starting to get in the movement of really realizing that homeownership is the biggest investment of your life, but there are so many other financial benefits for having that home ownership, going into real estate. They're just really building themselves to be financially savvy, for their future.
Yeah. And last thing I'll say to that too, when I'm thinking about it, because I just looked at the predictions for the next 3 years. Mm-hmm. So we didn't see a ton of equity gains this year. We probably won't see a ton of equity gains next year, but going into 2025, 2026, we're back up in the 5 to 7% range in equity gain on on property owned.
Yep.
So it's just one of the best long-term stable
Absolutely.
ways for your money to make you money.
Make you
And
money. Exactly. You
yeah,
said it perfectly. Yep. No, exactly.
yeah.
1000% agree. Yep.
Thank you so much. That was fun
No,
to talk to
thank
you today.
you. You as well. I appreciate you. I always love having our conversation. So looking forward
Me
to our
too.
next one.